Hello and welcome to this session in which we will audit prepaid expenses. Now, prepaid expenses are part of the acquisition and payment cycle. Why? Because we pay for them and we have to send money out. However, since they are a special group of assets, we're going to look at them separately. Prepaid. Now, in the real world, prepaid are not a major issue in the real world. Why? Because prepaid are relatively small compared to other assets. Nevertheless, learning how to audit prepaid will help you in understanding the cycle and what assertions mean in different contexts. So although it's not important, but it's very beneficial. So what are prepaid? Prepaid are payment made in advance for goods or services that will be used in the future. And as far as we are concerned, prepaid are assets. Prepaid expenses, don't let the word expense fools you. They are prepaid. They are assets. They are initially recorded as assets on the balance sheet, and they are gradually expensed over time as they are used up, either through time, through consumption, through amortization, however they are used up. The most common examples of prepaid are prepaid rent, when you pay your rent in advance, prepaid insurance, that's very common for all businesses. You could prepay your advertisement, you could prepaid maintenance contractors, a lot of prepaid taxes, you could prepay any expense you would like to. That's perfectly fine. Now, the first thing I'm going to do in this session is show you real quick the accounting aspect of prepaid. And oftentimes, where would you see prepaid on the CPA exam? Maybe through a journal entry on the simulation. So I'm going to show you real quick the accounting journal entry that you would be expected to know for the exam. Then I would look at evaluating internal control, assessing internal control as an auditor, look at substantive testing, and we'll move on. It should not be a long session. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com.
Hello, my name is Farhat. You are here because you are either an accounting student, a finance student, or someone who's studying for their CMA or CPA exam. Great. You are looking for some additional help, and we can help you. I strongly encourage you to visit my website, farhatlectures.com. I offer additional lectures, resources, including PowerPoint slides, multiple choice questions, in some circumstances, exercises, and true-false questions. Our material is aligned with your CPA review courses, with your CMA review courses, with your college courses. I offer a risk-free trial that you can try to find out whether my website can help you or not. If you find it helpful, you subscribe, you keep your subscription. If not, you cancel and your risk is free. If you like this recording, if you like my lectures, you would like what's on the website, give me a chance to help you with your college courses as well as professional certification. I hope to see you on the website.
The first thing I need to discuss with you is the accounting aspect, which is something you should know by now if you are taking auditing. First, we put the prepaid on the books. Let's assume we prepaid rent for, let's make it 12,000 to make it easier. Let's assume we prepaid rent for 12,000 for 1 full year. So what happened is this, if this is prepaid rent, what's going to happen every month that goes by, we're going to reduce the prepaid rent by 1,000 and increase rent expense by 1,000. So prepaid rent eventually becomes an expense. All prepaid eventually become an expense. How? By reducing the prepaid and increasing the expense. So that's the normal, let's call it the normal way of recording prepaid. First, they are recorded as an asset, then they are expensed. Now, here's what you could see on the CPA exam. Okay, I just want to make sure you are aware of this. What you would see on the CPA exam is something, you could see something like this. They can consider it an error, or they would tell you this is how this company record their prepaid. So rather than recording the 12,000 as a prepaid, they would first record the 12,000 as an expense. And let's assume they paid for this September 1st. So they paid 12,000 September 1st for 12 months. So here's what's going to happen. We have September, October, November, and December. From September 1st till December 31st, 4 months went by. So here's what's going to happen now. What you're going to have to do now, you're going to have to keep only in expenses 4,000 and remove the 8,000 into prepaid. So this is not the normal way in quote. So what you have to do now, you have to back out $8,000. You have to credit expenses 8,000 where 4,000 and rent expense is remaining. So this is the balance and this is the adjustment. Then you have to debit prepaid 8,000 because you still have 8 months. Remember, you purchased this policy in September. So the 4 month is for September, October, November, December. You still have 8 months, $8,000. So your prepaid rent is 8,000. This is the adjustment and this is the balance as well in the prepaid rent. This is the adjustment and the balance is 8,000. So be careful how the prepaid is giving. So that's the trickiest thing they could give you. In other words, if they give you the normal prepaid, yeah, it's easy. If they tell you back it out of expenses and put it in prepaid, you have to kind of work backward. The first thing I will do is, just like in any cycle, the auditor is expected to do what? To evaluate the internal control over prepaid. So to ensure the accuracy of prepaid, companies implement certain internal control that the auditor will have to evaluate, like, a detailed schedule tracking prepaid assets, their amortization schedule and expiration date. So companies, they will have a schedule of their prepaid with detailed information. Supervisory review, ensuring that journal entries are reviewed and approved by finance manager. Those are part. So as an auditor, we say, okay, are they doing so? Are they getting approval before they make an adjustment, before they expense certain prepaid? Reconciliation procedure, comparing the general ledger balance with support and documentation. So when we make an entry, when we have a balance, is it matching the source document, the support and documentation? Is the company doing that on a regular basis to make sure that their prepaid expenses and the related expense are properly recorded? Verification of expense allocation, confirming that expense are allocated to the appropriate period based on contract term. Verification of expense allocation, it's also a cutoff, making sure it's in the right period. Now, when we audit the prepaid, what do we do? As auditor, you perform certain procedures, and we're going to look at key audit steps. The first thing you do is give us that schedule of prepaid. Give us a list of it. Okay? Obtain that list, which could include the policy number, the contract number, coverage details, how much we paid, what's the remaining balance, how are we expensing this prepaid. So basically what the company is doing, give us the schedule. So the auditor ensures that this schedule reconciled with the general ledger and previous year balance. So we would look at this schedule and say, okay, does it match to the prior year? Does it match to the current year as given to us right now? Then we can perform, as part of the testing, analytical procedures. Analytical procedures, it helps the auditor identify trends or inconsistencies. We could compare the prepaid balance year over year. Well, prepaid, again, it's a small amount and it should stay the same. So if we have 10,000 of insurance expense of prepaid insurance, as 5,000 expires, the company most likely will add another 5,000. So the balance should be around 5,000. So the balance should be the same. Now, if the company is expanding, for example, they might have more prepaid rent. But in the absence of things, prepaid should stay balanced from year to year. So we could look at this. The auditor could assess the ratio of prepaid to total insurance expense, examining one specific prepaid like insurance. If the ratio significantly changed, it may indicate improper allocation. We would look at how much insurance expense we have versus prepaid. At any point in time, it should be 30% ratio. If it's higher or lower, we need to investigate. We could look at trend analysis. If prepaid expenses decrease while the insurance coverage remain constant, we could investigate potential misstatement. So analytical procedures are helpful here. They could be relied on because the amount is not large, so we can do that. Let's take a look at this multiple choice question from farhatlectures.com. Which of the following is an audit test to verify the accuracy of prepaid? So we're looking for accuracy. Okay. Should we recalculate of the unexpired insurance? Yes, if we recalculate the unexpired, we know the expired. I would say this is definitely a good answer choice. Examining the premium invoice. Should we know how much we paid? Sure, it will help us. Hold on a second. We have two answers. There's all of the above. So yeah, you have to know how much you paid, because how much you paid is what's going to tell you how much is left and how much was expired. A and B, they're both correct. Confirming from an insurance, why not? Get the confirmation. That's also going to help with accuracy. So all the above would ensure accuracy. Now also confirmation would also confirm existence, occurrence, which is good, completeness. If they'll tell us all, tell me if there's any other prepaid that they paid for. So it's good. Confirmation is always good. What should you do now? Audit is analytics. You need to understand it, but you also need to practice questions. And this is where Farhat lectures will help you. Go to Farhat lectures, look at additional MCQs. Whether you are a student or a CPA exam candidate, the best thing to do is to invest in yourself. Invest in yourself. Good luck and stay safe.